So, in the on this fun journey of building hope and faith that God could really transform a city, could transform a state, one of the little breadcrumb trails that's fun to follow, that is like evidence for God at work, is, the amazing people that God brings here from other places, that it just makes no sense why they're here. I mean, and all three of these guys, I put in that category of, if they're here, God must be up to something. So it's really, really a privilege that you guys live here and that you're here in this room. So I want to start like we do most. This is a format we'll use throughout the process. We'll give them each an opportunity to just give you more insight into who they are, and you're using that time to formulate questions you can use in this time and in the one-on-ones if some of you meet with them one-on-one. And then I've got a question for each of you specifically, and then we're going to open it up to the group. So Kevin, will you start? And I just want to give each of you just an opportunity to take a few minutes and tell us just a little bit more about your career background, what you're doing now, and then kind of like maybe something, just even in your personal life that you're wrestling with right now, or everyone would kind of needs to know about kind of where you're at today.
Well, I'll try to spare the long version of my life story, but I for some reason from a young age I wanted to make a lot of money, and I didn't know where that came from. And I met Jesus at 13, and then I said, well, I want to make a lot of money and then go serve Jesus. And that kind of set the course for the trajectory of my life. I got married in between my sophomore and junior year of college. Had my first kid when I graduated shortly after college, and was deeply involved in the church world. My father-in-law was a pastor. My wife's uncle was a pastor. We planted small churches. But I also had a foot in the business and investing world, and I worked at a hedge fund in Connecticut called Bridgewater. And when I started there in 2008, it was still relatively under the radar. We were heading into the financial crisis, and then the world kind of fell apart, and Bridgewater was at the forefront of really understanding a lot of what was going on. And so it was a really interesting place to grow up, learn about the investing world, work with lots of really smart investors across the globe. Short story of why I ended up here. I had a brother and sister-in-law who lived here, and during COVID we wanted to be close to them. Weren't sure if we were going to stay. I was still working for Bridgewater, and 5 years later, this is home. So.
Thanks, Kevin. Matt?
Yep. Matt Wilson. I am a native Oklahoman. I grew up in a small town in a similar kind of way. I also want to make a lot of money someday, just like Kevin. When I was little, I always wanted to live someplace where you don't drive to work. And that ultimately manifested itself when I ended up getting a job at a private equity firm in Chicago about 15 years ago at this point. Similar to Kevin's story as well, at the time, the firm that I went to work for was a very small, unheard of fund. And today it's one of the largest private equity firms in the world, focused on investing in technology companies. So it was a really unique place to learn how to invest in technology companies, how to work with companies, how to work with management teams, and build businesses, build good companies. I lived in Chicago, Austin, and San Francisco doing that. And ultimately, one of the things that I recognized over time was that Oklahoma as a state has a lot of smart people, a lot of capital, very under the radar capital. But technology as an industry is not a really big thing, the way it is in a lot of other places. And so I moved back here about 7 years ago now, and started organizing capital into technology investments all over the United States. Today we are investing out of our second fund that we are investing in those technology companies. Over the course of since we started, We've raised about a little under $50 million total that we've invested, again, all over the United States. And really what we kind of endeavor to do is to give our investors that are local mostly access to really attractive, really interesting technology investments all over the United States, and hopefully to, over time, compound that capital here in Oklahoma, which then will benefit the city and state in really big ways.
Let me ask you a quick follow-on, Matt. Where is the ecosystem right now? And I mean, how have you seen the ecosystem develop in Oklahoma City, even just in the 7 years since you've been back? And are you starting to see some deal flow that's more local?
I felt like there was a lot of momentum a couple of years ago, and I feel like it has tapered off a little bit. Tulsa, especially, has experienced major setbacks because of some stuff that has gone on with some of the larger funders in Tulsa. There's been very big negative impacts to their ecosystem. Some of that has impacted Oklahoma City as well. Now there are very small focused things like what you guys are doing, some of the stuff like at the Verge and things like that. There are pockets of things, but it's all it's very micro and very focused. There's not a lot of everybody's kind of doing their own thing, and so there's not a lot of coordination across all of those things. We have a couple of investments in Oklahoma. It's probably 10 to 20% of our entire portfolio of all the deals that we've done.
Yep.
So there are things, but it just kind of takes time.
Yeah, thank you, Matt. Jacob, tell us a little of your background.
Hey everybody, I'm Jacob Willis. It's always weird to hear your voice echoing behind you when you're talking. I am not an Okie. I was born and raised in Kansas City, and never had really thought about Oklahoma unless I was driving through. But I married a girl who had moved here after college and loved Oklahoma City. And I started my career with a large conglomerate called Koch Industries. They are the largest private company that you probably never heard of, or maybe through some political stuff that they used to be more involved in back in the day. But that was where I started my career, and I lived in Houston with them, and I worked on their mergers and acquisitions team. So I helped specifically their commodity trading groups make acquisitions, and was a great experience early in my career, but ultimately wanted to do something a little bit smaller and more entrepreneurial. My dad is a small business owner, and always wanted to do something entrepreneurial, but leverage the finance background that I loved. How I kind of realized my calling in this business world, the day before I moved to Houston, I was at a coffee shop and a lady came up to me that I didn't know and said, "I want to pray for you. I hear that there is from the Lord that there's a calling on your life to be in the business world, and the Lord's going to use you to make a big impact in the business world." Didn't know me. And so I took that as a sign that this is what I need to go into, and it happened to be the day before I moved. So it was kind of a crazy experience. But so that's what motivates me and gets me excited about being in finance. Even though the finance world is fairly dark, I tell my kids that I hear a lot of bad words all day, not necessarily from my coworkers sometimes, but a lot of the investors and clients that we interact with. So there's a real opportunity to stand out and be different, and that's what I get a chance to do. Work for Infinity Capital Partners. We're based here in Oklahoma City. We are an investment bank, and what that means, we don't take deposits or make loans. We help, we're essentially brokers for capital transactions for businesses. And so we work with businesses that are going through some sort of a capital transition, whether they're business owners looking to sell, or if they're looking to take on capital to grow their business or acquire another business. We go find investors that are interested in backing that capital need, and we help facilitate that process. Easiest way to understand it is we're a real estate agent for a business, and we help business owners through that process.
Yeah, thank you, Jacob. So just to recap, to help you guys, just to label these guys for you, investment banker basically helps people who own small to medium-sized businesses evaluate their potential to sell, facilitates the transaction. So he evaluates what makes a good business all day. Matt is a venture capitalist. He's a venture tech investor. He's looking at mostly early stage tech companies. Again, he spends all day every day looking at what makes a company successful. So every single person in here, there's things that Matt has that will make sense for you. And then Kevin is a family office or institutional investor. So he is an expert in all asset classes, from direct deals, which a direct deal would be, Kevin wants to invest in, an equity position in Brittany's company, and all two funds as well. So Kevin also would be familiar with safes, convertible notes, equity investments, all of that kind of stuff. That make things clear as mud? Mm-hmm. Yeah. Good. Okay, I got some specific questions for you guys. Matt, we're going to start with you. So you go and find companies that you believe have potential to grow. What are some of the universal principles around partnership with investors that you would think would apply to most of the room?
Yeah, so as it relates to like the relationship with investors, and where I sit, I'm both an investor and an investee, if you will. So I raise capital from other people and then go invest it on their behalf. So I invest in companies, but I also have people that have invested with me. So I kind of have both sides of that relationship. And like from my perspective, on both sides of that, the way I would describe it is surprises are bad. So like transparency, integrity, like thoughtfulness, like clear and concise communication. If there's something going on that like you need to communicate to your investors, like doing it quickly, both good and bad news, as soon as you know it. Like if when you have a situation where you learn about something that impacts your business, both good and bad, the faster you speak with your investors about those things and the more transparent you are, the better off it will always be, because with good things, oftentimes your investors or your partners can help you amplify and magnify good things. They can help you capitalize in better ways on good things that are happening with your business, and also they can help you mitigate negative things that go on with your business. And so the more and better you communicate with those folks, it will help you with both good and bad things in your company. Obviously, like equity investors, debt investors, things like that are different than nonprofit like donors or things like that. But across the board, I have found that people, investors, whatever, are incredibly, like, they want you to be successful. And so including them in your conversation, your business journey, even when things aren't going the way you expected, both good and bad, like the more you include folks in that journey, people genuinely want you to succeed, and they'll be incredibly forgiving. They'll be incredibly thoughtful and helpful, as long as you are honest and transparent with them. The moment somebody loses trust or faith in what you're doing, you're done. If you do not do those things, you will lose the trust of those individuals, and when you lose the trust of those individuals, you're toast. And Oklahoma is an incredibly relationship-driven market that almost to a point where that trust and that relationship is more valuable and means more than any legal document, any other part of what you do. And so that trust that you build with those folks is so monumentally important.
Matt, thank you. That is so good, and I know that applies especially to banking relationships and supplier relationships and across the board, transparency and authenticity. That's awesome. Thank you. Kevin, just talk a little bit about your heart for founders. Like, what should a mindset be before a founder contemplates, should I have a relationship with outside capital, other than bank debt? And I mean, what kind of process, do you see? Where do you see founders mess up in that area? And what would kind of your heart be for that?
So I don't know that I've ever really talked about it this way, but I was kind of thinking about it, and I think the important thing to keep in mind is in a lot of ways, money is a commodity, meaning it's neither good nor bad. It just sort of is out there as a tool to be used. And if you think about commodities, if you think about oil or gas or sort of anything else, there are healthy ways to extract commodities, and then there are unhealthy ways to extract commodities, and there are healthy ways to use commodities, and there are unhealthy ways to use commodities. And so I think one of the big mistakes that people make is they over-anchor on the commodity itself. So they think that money is the thing that they need. And what they don't spend enough time thinking about are what are the trade-offs and the pros and cons that come with extracting this commodity in a particular way, and how do I want to use this commodity? And so, and I think it's a challenge that we all fall into. Where I see it work best is where there is sort of a lot of what Matt was talking about: trust, common values, integrity, relationship, and there's a strategic fit. And the other thing that I've been thinking a lot about lately is, the bedrock of everything is sort of relationships, and there's no easy way to scale relationships. Relationships take time. They take going through ups and downs. They take the good and the bad to see if, you may have a conversation, it may sound like off the bat our values are aligned, but then when you get into the trenches and start going through things, that's when values and alignment are really stress tested. So I think, my heart for any founder is to think very, very strategically about how much of the commodity you need and how you want to extract it and how you want to use it.
That's good. Can you clarify one thing, Kevin? You said that there needs to be strategic alignment. What does that mean?
There's different ways to think about it, and it's not always one size fits all. Matt, for example, is a technology investor. So if you're developing a really technical biotech product, Matt may have capital, but he may not be a good strategic fit because he doesn't live in that world. He doesn't have relationships in that world. He doesn't understand the science, and that's one way to think about it. So, it gets back to what Brian was talking about, the different forms of capital. Oftentimes, if you're building a business, your greatest need is probably two things. One, someone who's gone ahead and done something similar and knows all the pitfalls, and so can give you strategic mentorship. And then the second thing is, ultimately, at the end of the day, you are providing a product or a service, and so someone who knows how to access the channels for your product and service. Those are oftentimes the most strategic elements of an important relationship.
Thank you. That's good. Okay, Jacob, your career has been to look at founders and their businesses, and in particular ones that have grown, some pretty good size operating businesses. What advice would you give to founders about the healthy cultures you've observed, and then talk a little bit about how you've seen founders integrate their faith in helpful ways?
Yeah. We've seen a wide variety of cultures. Having been a part of 50 plus transactions, helping people through a sale process or a capital raising process, there are peaks and valleys of any deal, and you see people's true colors come out. I think from a cultural alignment standpoint, it is the exception, not the norm, of finding a company with really good culture. Many companies operate and generate revenue and earnings, but have pretty bad cultures. The best ones that we see are owners that have a real vested interest in their people, and they love to see their people flourish. Some of the saddest deals we're a part of are ones where the owner gets a lot of money and the people who don't have ownership don't participate in any of it, and they have to deal with all the consequences of a transaction that can oftentimes be very stressful because a new owner comes in, there's many times disruption, and the ones that are really good and positive experiences that we see are ones where the owner, just one that we transaction this summer, business here in Oklahoma City, and the owner, he sold his business for around $17 million. It was a great outcome. And he decided to give away $2 million of his proceeds to his 28 employees. And he split that apart. And that's a life-changing amount of money for people that were making $18 an hour. So that was a really cool experience. He happened to be a believer. And that doesn't necessarily mean that there are very generous people that don't necessarily have a faith background. But I think it goes to people that have a heart for their employees and are others focused versus self-focused is really a big cultural piece. Sorry, what was the second piece?
Yeah, just how any other standout examples of how you've seen people integrate their faith in their business in a way that would be exemplary, for whether they're transacting with Christians or non-Christians or whatever.
Yeah, I think using some, we also, going back to kind of the peaks and valleys of a transaction and just the peaks and valleys of running a business, you're going to encounter obstacles, and seeing people that approach those obstacles as a opportunity. How can we find the opportunity in this challenge? And instead of just throwing your hands up and giving up, having that heart of perseverance and being a good example to their team going through hardship, I think is a really important piece. What we do, we're interacting primarily with founders and people that have started the business. So there's a lot of emotional ties and sometimes family dynamics that get involved. And I was telling Brian as we were prepping for this, but my job is, as I've risen in the organization, dealing more with clients, feels like I'm a lot more of a counselor than a finance guy, because at the end of the day, the numbers kind of are what they are, and the emotional roller coaster starts, and that's where we get to really earn our stripes.
That makes sense. Okay, we're going to do Q&A, and nonprofit founders, don't assume that these guys don't have things that would be helpful. Their world makes them very adjacent to the nonprofit world. They probably are all serving on nonprofit boards right now or have in the past. Or you can recruit them right now. That's right. Okay, who's got a question? Just one at a time.
Oh, God.
Come on, Kirk.
I have a microphone voice. For Matt, you had talked about the technology in Oklahoma City and Tulsa had kind of died off, but it had a peak. What do you believe is the peak, and what do you believe is the reason that it has tapered off in the last 2 years?
Yes, I wouldn't say that it's like that we peaked and fell off per se. It just it felt like there was kind of a rising tide of momentum that like it felt like it more leveled off, and like it's kind of like been steady for a couple of years. Tulsa, the reason was there was a changeover in leadership at the George Kaiser Family Foundation, and which led to substantial changes in the way they were supporting the ecosystem in Tulsa. And so there was a funder who was previously funding tens, if not hundreds of millions of dollars a year to support that ecosystem, basically went to zero and stopped. And so a lot of things, a lot of really good things, really good momentum that was being built in Tulsa, it came to a halt very, very abruptly. And that has led to a massive decrease in momentum. I would say Tulsa is probably trending peaked and then it's coming down. Oklahoma City, it feels like we're kind of we've leveled off, but there are companies and things that are being built in Oklahoma City right now by Alex Pezel was a successful exited founder of a company called TokenX. Robin Robertson had We Go Look. They've teamed up to run a insurance, an AI-powered insurance claims company. Two successful Oklahoma City founders teaming up to go build a new company. And there are other examples of things like that are going on. And so I think if we can get a couple of things like that, your company that you're building, there are examples of people that are building good technology companies in Oklahoma City that if they can ascend to a level that frankly we haven't had a lot of companies ascend to in Oklahoma City, then I think we'll be on a path to where that tapering off, we see another leg up. But that's kind of my perspective. You probably have some thoughts on that. Well,
yeah, and I think there's also just a reality that competition does in fact impact quality at some level. I kind of use the analogy of if you're a 5-star recruit, you're probably not looking to go to an Ivy League school to play football, right? You might go to OU, but the level of competition, right, sets the standard. And there's just a reality that if you go to the coast, the competition from a tech perspective are significantly greater. So the amount of funding within the ecosystem, the amount of talent, the amount of resources, and we're just in an environment right now where, frankly, technology is moving so quickly that we just have the natural challenge of we don't have that level of competition. So that's just not to say the ecosystem can't be successful. It's just a reality that we deal with.
Yep. Also, generally across the board, venture capital is highly out of favor right now for a whole number of reasons. And so raising capital for startups and venture funds and the like is incredibly difficult. So that's a kind of a headwind to a national or global headwind to the entire ecosystem developing is just access to capital in startup and venture world is incredibly challenging right now.
Mm-hmm. Yeah.
I hope I can get this out, but you mentioned that it's rare to see a culture of giving, and there's this huge difference between leadership salaries and the folks that are boots on the ground really doing the work. Do you have a formula in mind that you would look at that is healthy, that is admirable, both in the for-profit and obviously I run a nonprofit in mind, or is that something you thought through?
That's a great question. What I've heard some successful business owners do is they have a percentage allocation at the end of every year that looks at profits, and that they have a committed amount that they are going to give back to their folks, be that in the form of bonuses or something. But in a people-intensive business, it's just very important to make sure that they're continually motivated. But how do you do that in a way that aligns all the incentives, right? And not creates this expectation that they're going to get a huge bonus every year. So you want to align incentives to where they're hitting goals every year and not sitting back, but also allocating some of the company's extra to employees. I've seen successful companies do that, where it's not just distributed into the owner's pockets, and it's maybe a little bit different in the nonprofit world, but and I'm not an expert in that arena, but I think if an organization has key metrics in mind and key goals, and those have been exceeded, and the business has profitability, then some of that should be used to give back to the employees that helped bring it there. Would be
So nonprofits, we're not allowed to have a profit. I mean, you're doing it wrong if you have a profit.
Yeah.
So do you have a preference on, or have you seen a healthy org chart in the nonprofit world where you're like, okay, this makes sense. There's a good gap. This is, we're not, one guy is getting it all and then the rest is,
Yeah, the nonprofits, that's a great question. If you have
Well, I don't know. Do you have it?
I'm the nonprofit space. I'm probably not as
I'm not an expert in nonprofit, but I've been thinking a lot about this because, my struggle is I live deeply in the for-profit world where there's so much resource and talent to optimize profit. And I think about the nonprofit world and I think, well, the problems that they're solving are actually significantly greater from if you adjust your frame of what profit is. And you adjust that to human flourishing, but oftentimes there's a struggle for resources, for capital, for talent, for technology, for all of these things. And so increasingly what I would encourage nonprofit founders to do is find ways of connection and relationship to for-profit organizations and try to glean what particularly successful businesses, what are some of the things that we could start to adopt and model, and not think that just because we're a nonprofit, we have to starve, right? The work we're doing is important, and we should have access to talent and resources, and we should be looking to funders who understand that. So I don't know that no one's cracked the code on that, but I think increasingly as challenges in our society get greater, it's going to be a real focus.
That's good.
Your initial question was kind of around culture, and pardon my language here for a second. I'm quoting somebody. When I worked in private equity, the firm I used to work for, a firm called Vista Equity Partners, I was in a board meeting, the CEO, a couple board meetings in a row, didn't really hit his numbers, but he always talked about culture. Oh, we're building culture, you gotta trust us, we're building culture, et cetera. And Robert Smith, the founder of Vista, looked at it and said, Monty, it's the last time I want to hear about culture. The way you build culture is by getting shit done. And I think to me, what that really means is people, the way you build that culture is the same way you build relationships with your investors. It's by going through the ups and downs. It's by rolling up your sleeves, working together, having a common goal, having a common mission, having targets that you're measured by, being held accountable. All of those things give people meaning, it gives them passion, it gives them purpose. And so the more you can do to be intentional with your employees as opposed to just letting them be, part of your team is actually really valuable. And it's almost counterintuitive because you want to be able to give them that purpose without micromanaging somebody. Because then you get to kind of go through the good and the bad of that, and it builds a quality and depth of relationship that kind of goes beyond just I show up, I work, I get my paycheck.
All right. We got time for one more question. Tabitha, closest to the mic.
Matt, you mentioned how difficult it is to raise money in this environment. I know you talked about building relationships, and of course it's all about the revenue, but from the folks that I've talked to, it's all about tech, right? what is your advice for CPG companies in this environment?
It's a great question. Across the board, it's like raising capital is hard right now, especially for early stage companies. I think the best things that you can do when you're trying to raise capital is, to Kevin's point earlier, of like finding the right people. And it's such generic advice, but it's so painfully important that like the companies that we see that have successful fundraisers are the people that find their right investor. Like, they find the people that understand like what they're pursuing, how they're pursuing it, why they're pursuing it, and it's important to them too. And that takes so much time and effort of finding your right investors. There is capital out there for every type of business if you've built a good business or you have a good business idea, but it's not every single investor, right? But that process of finding those people who are your right investor takes so much time and effort and networking and relationship building. It's incredibly time intensive, but when you find it, it's frankly really magical to see it come together. It's really hard to raise capital right now. It really is. There's no other way of putting it. But again, it comes down to finding the right people that can provide you with the strategic value to your business in addition to just money. Because the extra thing I would add to what Kevin said earlier is raising equity capital is much more akin to getting married than anything else. You are signing up for a long-term relationship with ups and downs that needs to be a relationship built on trust and accountability and like all of the same things that a marriage is built on. And so going into the process with that mentality is really important, because if you go into it with like, oh, I'm just getting some money, like you're in for a very big surprise, because you are signing up for something much more, like much different than that.
That's good. Thank you guys. Appreciate it.